Hello and welcome to today's update. Today is 12th of September 2022. So we'll discuss what happened in the market today and what's likely to happen this week. So I've got a daily chart of SPY. So let's have a quick look at what's happening to SPY. SPY, since it fell to this level around 390, which is where there were a number of support sitting in their zone. It's been rallying for the last 4 sessions. You can see 4 green candles. So it's been rallying quite strongly ahead of tomorrow's important consumer price report to be coming out 1 hour before the market opens. So it looks like investors feel very confident about this report. This is an important report because it will show the state of inflation. We'll come back to that a little bit later, but looking at the daily chart, we can see that it's got a very strong move up, and now it's sitting at some resistance around 411. Now, if I bring in the moving average, you can see that this rally has pushed the price above the daily 20 and 50 moving averages. The price had fallen below those two moving averages, but managed to recover nicely. So that's a very positive sign. So I'll just get rid of this. So at the moment, it is sitting right at resistance around 411. Beyond there, the resistance is 419. This is where the selling actually started from Chairman Powell's comment in Jackson Hole, this big red candle. So this is an important zone because this is where this latest move on the downside started. So if we can take out this level, then it basically exposes the previous high around 430. So far it's looking good, but everything depends upon what happens tomorrow. The CPI number is going to come out, and it will, and the market will react to it. A friendly report certainly could support further rally, but a stronger than expected report could reverse some of this gain. Now, let's quickly have a look at some of the drivers of inflation. As you know that inflation has been going up, but what we want to do is look at some of the drivers of inflation and see where things are. Well, one of them is oil prices. As you know that crude oil prices have been coming down since reaching a high of about 125. It's now in the mid 80s. So certainly crude oil prices have come down, which means that prices at the pump, the national average, which was about $5 a gallon in the US, is now well below $4. So that's a good sign and helpful to inflation. Secondly, the commodity prices. Wheat, corn, soybean prices, they have gone up sharply ever since the Russian war with Ukraine started, because there's a lot of wheat that gets exported from Ukraine, and those were stuck. So, but now that those shipments have started, commodity prices, wheat, corn price, soybean prices have started to come down in the world market. So that's also helpful from an inflation point of view. The other thing that has happening is that prices of various metals, steel, silver, copper, aluminum, which are used in constructions and industrial productions, they've also been coming down, which means that the cost of production now can come down a little bit. So this is also helpful from an inflation point of view. The home prices also have been moderating in the US due to rise in mortgage rates. mortgage rates, 30-year mortgage rates, which were around 3% at the beginning of the year, they are close to 6%, as a result of which it's now become difficult for a lot of people to be able to buy homes, because the monthly interest rate has gone up considerably. As a result, there's been the demand for home prices have decreased a little bit. So we're seeing some declines in home prices. Additionally, supply chain problems have been resolved to a large extent. Related to that, freight and transportation costs have been declining. Many of the retail companies have stated that the transportation costs were very high. Walmart, Target, so those have started to come down. Retailers have now high levels of inventories. What this basically means is that they would have to offer discounts in order to reduce the inventory. Selling them at discount means that prices would have to come down. So effectively what we see is that drivers of inflation have been coming down, which means that we should see moderation in inflation. So let's have a look at what are some of the expectation for tomorrow. So here we have, in here you can see that tomorrow the CPI will be released. So this is the important number. So the market is looking for expectation of an increase in inflation, annual inflation of 8.1%. Last month, this is for the month of August. For the month of July, it was 8.5%. So market is now expecting inflation to fall further from the June level. July level. The June level was 9.1%. So if the actual number comes in around 8.1 or slightly below that, market might consider that to be positive, because then inflation would have fallen from 9.1% to 8.1%. So market would see that it's been heading in the right direction. So that's a key report. But if the number comes in above 8.1%, it could disappoint the market. So we'll have to see what the actual number. We'll wait for the actual number tomorrow. Now on Wednesday, the inflation at the producers level will come out. So the PPI will be reported on Wednesday. So that's another important report. And then on Thursday we have the retail sales figures coming out, and then on Friday we have the consumer sentiment report will be released. So we've got a number of economic reports coming out this week, and that could actually move the market. But market would want to see what happens to inflation, CPI number tomorrow. So going back to our chart, SPY chart. So again, as I said, if the number comes in friendly to the market, we could see a move through this level, which is 411. The next area would be this level, which is around 419, 420, because this is where the big drop happened after Fed Powell spoke in Jackson Hole. So that would be an important. So a friendly report can push through those levels, and if it's able to get through those levels, then obviously we would be looking at this level. If I bring in the moving averages, you'll see that this is where the 200-day moving average is. So previously in mid-August, it had risen to it came to the 200-day moving average, then pull back. So now market is moving higher. So if the CPI number is friendly tomorrow, we could see further rallies, and we could see at some point SPY testing the 200-day moving average again. You can see the MACD, which was declining, started to cross, and looks like it's making a cross here. If it can get back above the zero line, that would be positive. You can see RSI has been moving higher. It has now gone above the 50 level. This green line is the 50 level, so that's a positive sign. If we look at in a smaller time scale, just to see what's been happening, you can see that since falling to 390 here, it's been steadily moving higher. It has overtaken resistance at this level right here, which is around 4, and now it's so we've got some resistance from here, and you can see that it's been consolidating just below this level. So if the CPI number is positive tomorrow, we could see a push through this level, and then this area, the 420, will come into play, because this is basically where the most recent selling started after Fed Chairman spoke in Jackson Hole. So, but once it's able to take out this level, then this exposes the previous high. This is where the actual selling started from mid-August. So this is basically what the trading action looks like in a smaller time scale. So the 411 is an important level to get through, and that will basically push us to 419. If on the other hand report is weak, then the first level of support would be around 400, 401, and then we're looking at these levels 394 and 389. So a lot depends on what happens to tomorrow's report. If we look at QQQ next, we'll start off with looking at it in a smaller time scale. So again, what we see is QQQ is just below this resistance. So right here, QQQ towards the end of August spent a lot of time at this level, 313, 314 area. So this is the level that's going to offer near-term resistance. If it's able to get through this level, then obviously this level comes into play, because this is where the market started falling from Jackson Hole. So this is around 423. So that would be the next level. So if the CPI number is positive, then we can see QQQ moving through past this resistance and then to this level. The support obviously is around 303, and then the previous low of around 290 comes into play. If we look at QQQ on a daily time frame, so you can see again it had fallen to this level, so there was some support at this level. It's been moving higher. It has now overcome, gone above the daily 20 and 50 moving average, so that's definitely a positive sign. The MACD started to cross over. If it can go above the zero line, that would be really positive. RSI has been moving higher. It's gone above the level 50, so that's positive. Now this is the near-term resistance 320. This is where Fed Chairman spoke in Jackson Hole. So this would be an important area. If it's able to get through this level, then obviously there's a good chance that QQQ could test the 200-day moving average, which is around 433. It's where the previous mid-August high is sitting. So a lot depends on what happens to tomorrow's CPI report. But at least for the time being, short-term trend is up. So the question is whether this is going to continue further or we're going to see a reversal. Well, we'll have to wait and see what happens tomorrow. Now, if we look at other areas in the market, we'll start off with dollar. Dollar has been weak the past week. So you can see that it's been pulling back. It has closed below the daily 20, but it's still above the daily 50. So as long as it stays above the daily 50, we'd still have to consider that it's an uptrend. But I do want to make a note that at least it is showing some weakness. If we look at MACD, it has now crossed. It's now heading lower RSI is trending lower. So although it's at around the 50 level, but we are seeing that the momentum is on a short-term basis ticking to the downside. So we'll see how DXY, the dollar index, reacts to tomorrow's CPI report. A weak report, a friendly report, weak report meaning if the number comes in at 8.1% or below, then we could see further weakness in DXY. If we look at the yield, so 10-year yield continues to remain strong. So it was up another 4 basis points today, closed at 3.36, almost 3.36. As you can see, it's on a strong move to the upside. Again, I think there will be some reaction to tomorrow's report. So we'll see how the rates, 10-year yield reacts to the CPI. A weaker than expected report means that we could see some weakness, but a strong report, we could see some further increases. The previous high is around 3.5%, so it's not too far from that level. But tomorrow's report is going to provide some direction as to do we go, continue to move higher, or do we see some weakness creeping in. If we look at gold, for example, what we see is that gold found support right here at this level, which is around 1700. Since then, it's been gradually taking higher. Now it's right around this level, 1750. We've got the 20 EMA sitting there, which is going to provide some resistance. There is also horizontal resistance at that level. So if gold is able to get through 1750, then we could see a test of the 50-day moving average, and then this area, which is the previous swing high, which is around 1775. But overall, it's beginning to look better because we can see on a over the last week or so, it's been making a series of higher highs. But again, it needs to get through the 1750 area. We see that MACD is about to cross. If it's able to get back above the zero line, that would be positive. RSI has been moving higher, but still below the 50 level. So we need to see it get back above the 50 level, because previously it reversed when it reached the 50 level. So it needs to get back above the 50 level, which would show that the momentum is moving higher. If we look at the oil market, so oil has been steadily moving lower. Although it was up today, it was up 2.2%, but you can see that the moving averages are heading lower. It hasn't been able to overcome these moving averages. It encountered some resistance. So overall, it's still in a downtrend, but it is oversold right here. You can see stochastic. So there is room for a bounce. MACD is still below the zero line, but if it's able to cross and head towards the zero line and go above the zero line, then we could see some additional gain in oil, crude oil. So we'll see how things play out over the next few days. If we look at VIX, so VIX, I'll just remove the moving averages for a second. So we talked about this area, 2750, which was a problem area. Since then, it has pulled back and fell below the support area, which is 24. So the technical picture is now beginning to look weak. We see a crossover happening in a MACD. If it's able to get back below the zero line, it's still above the zero line. But if it's able to get back below the zero line, then we can see further decline in VIX. Again, we expect to see reaction to it after tomorrow's CPI report. If we look at some of the sectors, the growth sectors were strong. So this is XLK. Again, it's been moving higher. So it's closed right at this area of resistance, which is around 139. Beyond this, the resistance is at this level, and then at around 146. So again, it will react tomorrow, but it's at least moving in the right direction. Next one is XLY. XLY is consumer discretionary. It's also moving higher. It's now challenging this area of resistance. So this is basically where the selling started, the most recent, from after Fed Powell spoke in Jackson Hole. So if it's able to take out this level, that would be positive. It would then be moving towards this mid-August high. So that's looking better. Otherwise, all other S&P 500 indices, they've finished positive notes. So all the sectors are looking better, much better than a week ago. If we look at the biotech is slowly moving higher. Just wanted to show you that it's forming a nice base on a weekly basis. So you can see there's a bottom right here, and then there's another base here, and then it's forming another base here. So this appears to be like an inverted head and shoulder pattern it's forming. This is happening in a weekly time frame. So this area is important, which is around 94, 95. If it can get through this area, then it looks like this inverted head and shoulder would be completed. You can see on a weekly basis the MACD is moving higher, and it's about to cross above the zero line. This is going to be a very bullish development. If that happens, it would be something like here, what we saw. Once it crosses above the zero line, then the momentum would definitely be positive, and we could see further upside. So this one is looking very, very constructive. If we look at Bitcoin very quickly, so we look at 4 hours just to get an idea. So Bitcoin, it fell to this level. It's been under a lot of pressure, but since falling to this level and finding support, if I show you on the daily chart, you can see, so this level right here was the previous lows right here. So it found support right here, and then it's been moving up since then. You can see that it has gone through resistance right here. It's taken out resistance right here, and then it also has taken out resistance right here, because you can see that it spent quite a bit of time in this zone, and it closed right below the resistance right here. So if I show you, you can see you can see this resistance is coming from this level right here, which is around say 22,500-ish level. So if it's able to get through this level, then it exposes this previous high, which is around 25,000 right there. So it's looking positive, but it needs to get through this level. So that's Bitcoin. Now let's have a look at a couple of the stocks. I'll focus on the big tech. So this is Tesla. So Tesla, if I show you the moving averages, you can see that Tesla had fallen below the 20 and 50 moving averages, but it managed to recover nicely. And not only that, it also closed above the 200-day moving average, which is this black line. So that's positive, which basically means that that the next area of resistance is the previous highs, which was around 313 area. So this is definitely looking much better. I'll remove the moving averages. You can see it's now looking much better. So this area is going to be resistance, and again I'm expecting Tesla to move along with in the same direction as the overall market. If the overall market remains firm, reacts positive to tomorrow's CPI report, then we could see Tesla moving up and challenging these previous high again. Support obviously is this low, so we don't want to see it fall below this low, but before that the moving averages would come into play. Again, the moving averages 20 and 50 are moving higher, and they're heading towards the 200-day moving average. If it's able to close above the 200-day moving average, that would be a bullish cross. So we'll have to see how things play out in coming sessions. If we look at Apple next, Apple also has been under pressure since reaching a high of around 171. But over the last week or so, it started to, in the last few sessions, it started to go up. Today was a very strong day. It was up almost 4%. In the process, it has closed above the 200-day moving average. So this is quite positive. You can see that the MACD, it's about to cross here. If it can get back above the zero line, that would be positive. RSI is above the 50 level, so that's looking positive too. So overall, I see positive signs in Apple, but everything depends upon the market reaction tomorrow. If the CPI, if the market reaction is positive to tomorrow's CPI report, then we can see Apple move higher and then perhaps challenge this level, because this was the level from which this decline happened. So this would be an important level, which is around 171. So we'll see how things play out after the CPI report tomorrow. Well, thank you very much for watching the video. I'll speak to you soon again.